Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, July the 24th. The year's 2020. Let's talk trading. It's time for the weekly wrap up. And as you know by now, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, weekly wrap up. As you can see, all pairs filled the gap. So, if you traded that method on more than one pair, it looks like they all paid off for you. Now, of course, some of them went, and went opposite of the gap fill direction first, and maybe you stopped out. But if you hung in there the entire time, had your position size correct, never came near your stop, and your target was hit and filled. And you can see here the pound's pushing up again. And since I mentioned stop, remember, you have to have your risk management in place on all the trades. Do not lose any more than you're willing to lose on any single trade. It's that simple. That's how you make sure you don't blow it, not on any one single trade at least. You can see the pound every day this week was positive. And we definitely closed outside of the opening range for the week here, above it. We never went below the opening range. For the year, we're down 482 pips. Maybe the pound is trying to get back. I squeeze the chart. You can see what it looks like for the entire year. There's the open. Inside bar, there was no trade here, so we're not going to have an inside bar. So our inside bar on the daily was 41 days ago. Still some activity inside bars on some of the other pairs. Okay, it looks like the market's taking Friday off with only 3 pairs above 100, but the boys in New York are just getting started, so let's see what happens. On the buy zone, the pivot was outside of the buy zone. It was below here, the short zone or sell zone. So the first trade should have been to the south here. You can see first couple of trades, you either scratched it or hit your stop. Then you came back down here, hit the pivot, and a couple more broke through the pivot. But after it hit the pivot the first time, then the pivot trades off. Just pretty much trade what you could see. And as I mentioned, you can see here how it's ranging across that weekly open. So you could daily open. You could actually just start trading at that open line with the H1 candle color, of course. Now, one of the things I need to let you guys know, especially there's a bunch of new traders, so welcome to my channel, is that during the New York session, price usually likes to make a daily high or low. That's one of the statistics. So don't be surprised if price goes higher, makes a new high. Besides, we've got such a small range. The pound usually breaks out of that. Red rats, be careful because of that. Of course, it could make a new low to push the range too. We've seen that happen a couple times this week, where price will do a end-to-end move and then do it again the other way, and then do it a third time. pivot, you can see here we took out that pivot once again. I need to switch that back to H4 so you can get a better look there. You can see we took out the weekly pivot earlier in the week, and we left the pivot this week. So we've got 2 missed pivots for the month of July so far. Wick zone, we have pretty big wicks, but still, price doesn't like staying in the wick zone, in and out. And once again, this hour we poked out, crossing the previous day's high, which is another one of those very simple trades. In fact, if you're just starting out trading, it's something you could sit and wait for, especially if you can't seem to focus and you want to trade multiple pairs. That would be one of the trades I would suggest. But if you're starting out, you should be just trading one pair and focus on the method and get it down. And you can sometimes just look for a 5 or 10 pip movement off of that area. Let's see, what did we have here? We had a high of 729, and the previous high was 59, so 72 minus 59 is 13. So once again, you could have taken 10 pips off of that trade. In fact, that's one of the no-look trades Walmart likes to do. I think I was the one that mentioned it to him, and he's been doing it with success. And just looking at the different ranges here for the day, once again, high minus low on the daily is only 56 pips at the 3 percentile. So that means over the last 100 days, only 3 days had ranges of less than 56. And you can see here we're just starting at the top of the hour here. 2 pip range so far. And I doubt it's going to stay at 2 pips. Price has to range. And in fact, that's one of the reasons we make money as traders, because price range. I think I talked about in the scalping, or rather in the, what was it? Step-by-step series. So I talked about the physics and geometry and mathematics, and science of trading. Once again, distance and time, price ranges. It travels a distance over a period of time. But it's one of those things where it's so obvious most people don't really think about it. They don't consider it in their trading. Oh, and one of the other things, I had some questions about scalping, and there seems to be some things that people don't really understand. So maybe I should answer those so over the weekend they can put it all together, hopefully. Scalping. Once again, scalping is you just want to take 1, maybe 2 pips. Maybe you get lucky like I did in the video and I got 3.7. But you're just looking for an opportunity to make a pip or 2. And usually you're going to be trading for at least, say, $5 or $10 a pip to make it worth your while. Maybe trading's just a hobby and you're not trying to live off your trading, but you like trading and you figure, hey, maybe I can make an extra 50 or $100 a day. I can get in and out, maybe, or maybe you're working and you want to make some extra, make trading your side hustle. I think that's the new vernacular for trading now, is side hustle. I guess in the old days it was side job or part-time job, but there's not too many full-time jobs, but I digress. So scalping, you just want to make a pip or two. Now, there's a lot of people were talking about the spread, okay? The spread is the difference between the bid and the ask. And you can see here, this is my little spread history, spread dots history. So it's telling you here live. So you see the spreads between 1.2, dropped down to 1.1, just went up to 1.4. So, but it seems to be oscillating between 1.2 and 1.3. Basically, that's the cost of your trade on this particular platform, on this particular, with this particular broker. You can see now the spread just dropped down to 1 and 1.0. It's a variable spread. It's not fixed. Because the thing about Forex is, and one of the things that actually got me banned off of Forex Factory was because when I first came to trade Forex trading, I found a broker that actually gave level 2 display. And there was no variable spread. It was a fixed spread. And so, and you traded off of that. And basically, it was 1 pip difference because that was before the 5 digits. And so, in order to make money, you had to overcome the spread. Meaning, if I were to go long right here at 65, the bid's going to have to get to 65 just for me to break even. Okay? And as you can see now, now I'd be even if I had taken that trade. So now, if it goes up and the bid becomes 66 and I punch out, and it just did, I would, now it's 67, then I could have made a pip if I punched out at 66. And that's it. That's how spread works. So the cost of my trade at that particular time was between 1.2 or 1.3 pips. So do I take spread in account only? I only know to trade if this is somewhere around that under 1.5 or so, unless there was some other circumstances where I was confident, really confident that it was going to go my way, and maybe I would pay two pips. But the thing is, the spread changes on some brokers. Spread is fixed on some brokers, but really back then, there really wasn't a fixed spread. Because if you have buyers and sellers coming in the market, they can put whatever price they want to. And so the spread can change. But I used to call them fixed spread bandits because they were basically cheating people. Now people will say, but you got to pay it on when you enter and when you exit. No, you don't. It's basically you pay it one time, as you saw. If I would have bought at 65 or wherever, if I would have bought at 65, the bid has to get to 65 for me to break even. Then it goes to 66. I sell, I make a pip. Now, the thing is, price actually had to move a pip plus the spread. So that was my cost. The spread is your cost of trading, and you only pay it once. But some people, I don't know where they get the idea you pay it twice, or it's something that it isn't. So hopefully that clears that up. And once again, the other thing is, you can trade off the daily chart if you want. You can trade and scalp off the monthly chart if you want. It's just really hard to see the movement. But once you get into trade, you could, like I said, you could pretty much forget the chart if you want, and you can just look here at what's going on, because you got to look at the money. That's what's important. So, fellow traders, I hope you had a profitable week. That's the weekly wrap up. Remember, it's not what you trade, it's how you trade it. drain the banks. Have a safe weekend. The Rumpled One signing out.